What's up? What's up? What's up? If you're tuning in, I'm just making sure that all the connections good and everything's going through. Okay, look like we good. Yep, everything's going through. I have 1 minute to start. It will start promptly at 7. This will probably be the same 30 to 40 minutes as the last info stream last week. So if you didn't catch that one, you can always go back. I'm leaving them in a group, and that is it. I am not sharing them anywhere else. So you will not be able to share them anywhere outside of this group. I am doing that on purpose. I am attempting to build this group up as much as I can. It is not a group for me to rap in or for you to promote rap in. If you have anything business, you can promote it in here. If you do flyers, if the flyers dope, I'll leave them up. If they trash, I will take them down. If you have a venue, you can promote it in here. Anything that has anything to do with business, I am all for it. Anything that I don't do, you can always promote in here. I am not I do not file grants or anything like that. So if you have anybody that do that, please add them to the group. There are other things that I don't do. I don't do taxes. I don't do um like I said, graphics or anything like that. So I have somebody that I'm working with to help me further my business and work with my clients. But that's not necessarily what this group is for. So you can share anything that's helpful in this group. I will not let anything promotional or spammy last in the group. I do not want to junk up my group or bring down the quality of my group. So being that it's 7, let's get to it. I don't want to hold anybody. I know we getting ready for school in the morning. If you have kids, like me, I got 4 of them. My lady pretty much does the morning things, but I'm up and out and about and getting to it. So I understand your plight. So we are going to get into this. This is the Real Life Business Solutions Group. There is also a YouTube page that I just started, so I'm building up that. Mostly focus on this group, but I'm getting some traction on the YouTube page. So the first thing that we covered was having an entrepreneurial mindset, and that included being able to take things as they come and being able to handle things and being able to handle upsets and actually understanding what it takes to be successful as an entrepreneur. In this info stream, we will cover the different forms of business entities. There are other things that go in between there, like actually mapping out what you want to do and getting things together. But we are getting right into the different forms of business entities, and you will see why in a second. A quick introduction to the people who don't know who I am. I am Alvin C. Hill the Fourth, aka Jackpot or JP1. Any name is fine. My family still call me Little Man, and that's fine too. Just don't call me and try to control what I put on my page. But I am the CEO of Real Life Business Solutions LLC and Gifted and Talented LLC. The difference is the Real Life Business Solutions is my credit and business consulting company, and Gifted and Talented is everything that I do entertainment. I'm still an artist. I put out a CD a couple weeks ago that is doing great, and the reviews were great. Video out, everything. Follow that. But that is not what this group is about. I currently have a business administration degree and my paralegal certification. I'm also a senior at Wayne State University's Mike Ilitch College of Business. I'll be graduating in May with a business management degree. So I've seen the best of times and the worst of times, but I've thrived. Basically, in my life, I've been through all types of ups and downs. And that is also what I try to talk about when I talk to other entrepreneurs, because life is hard. And if you want to make it through some things, you're going to have to weather the storm. And that includes getting your business off the ground. This is my contact information. It's 313-883-9664. That is my business number. That is not my personal number, but I do answer it. Do not call me on any type of garbage. Um, The email address for my business is jackpot@reallifebusinesssolutions.com. You can also email reallifebusinesssolutions at Gmail or reallifecreditsolutions at Gmail. All of those are linked to my company. So the let's get into the things that we will cover. The first thing that we will cover is formation requirements, liability, taxation, compensation, management, ownership, transfers, and the dissolution of the company, how you actually dissolve the company. The major objectives today is to discuss the pros and cons of the major forms of business entities. It's also to describe when it's beneficial to change the form of entities that you use, and also to explain the importance of working with a CPA and planning your taxes out thoroughly. All of these will be described in their own way. A lot of the things we'll go over between the different business entities. You'll understand why what you're doing is good for that or why what you're doing is not good for that particular entity. And you will understand the differences. This is not a thorough review of this. It is so long. And I usually go over that with my clients. This is basically to give you an understanding and a starting point as these info streams are. I cannot cover a lot of this information in 30 to 40 minutes. Um, it took me years of school to understand some of this stuff. So do not get overwhelmed. I am trying to keep this as simple as possible. I am basically introducing some of these different ideas to this group. Sole proprietorship is the first form of entity that we will cover, and that's because it is the easiest formation that you can have if you're trying to file an entity. Basically, in Michigan, all you have to do is file a DBA with the Secretary of State or the county office or whatever, and they will give you this DBA. It costs about 20 or $30, and basically you have no liability protection, which means you are liable for all of your business debts and there are no tax benefits. I do not recommend anybody filing a DBA and doing a sole proprietorship. It is pointless. It makes you feel better because you have a DBA, and all that says is, my name is Alvin Hill. I am doing business as Real Life Business Solutions. So that allows me to cash checks, but that does not protect me from any type of legal liability, anything else. Do not, I repeat, do not get a DBA and feel like you've done your part as a business owner. You are doing yourself a complete disservice, and it makes you feel better, but there's no benefits tax wise or liability wise to having a DBA. Now, what I do have, I have a couple DBAs which are connected to other LLCs. So I have Real Life Business Solutions LLC, and I have Real Life Credit Solutions as a DBA. So that allows me to get checks in that same bank account in either name. That's all that does for me. It allows me to open up business accounts with different things, whether it be online merchants or online services or anything like that. I can do it as either name, but it do not file a DBA as your personal name. Partnerships. Partnerships are pretty easy to set up. They're usually owned by two, three, four, five people. It's not a whole lot of people in these partnerships. If you were going to do more than three or four people, you would probably just get a corporation, because partnerships can get messy. You set forth the rules in these partnership agreements. Everything is laid out in writing. Taxes are passed through the partners. So you do not want to form a partnership if you are looking for any type of tax shelter. The taxes are not in the company's name. Everything is passed through to the partners. There is no liability protection. Your personal assets are at risk, and partners are liable for the company's debts. So when you are dealing with this type of entity, You are leaving yourself open for everything. Not only are the things that you do liable to get you sued, so is anything that your partners do. You can write everything out in your partnership agreement, and if there is any loophole, you will be held accountable. That leads us into limited partnerships. So, in limited partnerships, which is a little different than just having a partnership, general partners control the business, and limited partners have no active control. So what a limited partner may do is control the funds. They may, put in money or put in some type of assets to help start the company, but they do not control the everyday part of the business. They have no say so. They could be some type of angel funder or somebody that's just a bank for this particular company. Taxes are passed through to the partners. That once again, there is no tax shelter in these partnerships. The charging order can help you avoid liability, which means that it's basically going to lay out who's in charge of what and who is liable for what within the company. But once again, any type of loophole in this paperwork and you are liable. So if you're going to do a partnership agreement, you need to have an experienced attorney file these partnership agreements. Now, the partnership agreement can help you protect your assets, but you may be liable for other partners' debts. If you do not have these particular things in writing, they will say you are liable. If it is not in writing, you are liable for it. So your partnership agreement defines all your rules and regulations within this type of entity. Once again, if you get into 4 and 5 and 6 type of partners, you should just form a corporation and everybody could have a title, and things will be split up according to how you structure your corporation. Let's get into the favorite entity, a limited liability company. Limited liability company offers a lot of benefits because there are very few formation requirements. In Michigan, you only have to file your agreement with Michigan, and you do that on Secretary of State. And basically, you can have a limited liability company within 24 hours. Uh, the members are not liable for company debts. This is a great way to separate you from your company, you from the other members of your company, and you from all types of liabilities that you will have in just having a partnership. In this particular entity, there's no tax at the entity level. So the tax is passed through. Basically, you receive your money and you pay your taxes. You can also have these type of things written out in your operating agreement, as far as the way that the taxes come out and who will be taxed within the company. Everything can be mapped out in your operating agreement. These entities last in perpetuity. What that means is they last forever unless you put it in writing that this particular entity is only for a year or 2 years or 3 years. This company will last in perpetuity until you dissolve it. You can also sell your interest in this company. If you own 50% of this company, as long as it's not in your operating agreements that you cannot sell it, you can also pass this down to family members, or you can, you know, bring on family members to have your part of the company as long as it's not in your partnership agreements, your operating agreements. I'm sorry. Because if it's in your operating agreement that you have to be a part of this company and you are trying to sell it and not be a part of this company, you will be stuck in that company. The next thing we'll get into is the S corporations. So, a lot of LLCs are changing over to S corporations. And people ask me all the time, is that a good idea? It is definitely a good idea if you are making upwards of 40 to $50,000 in your LLC, because you have tax shelters. You have certain things that kick in after about 40 to 50,000. If you look at a graph of certain things, you will see that no one thing is good for everybody. No one entity is good for every company. LLCs are great if you're just starting off, your funds are limited, and you just want to get your business off the ground because you can always change it to an S corp. S corps are great after you're making 40 to $50,000 profit because you you have these tax shelters. Until you are making that, there is no need for you to have an S corp because the tax breaks are not enough to offset the different things that you'll be paying for having this corporation. The is owned by 75 or fewer shareholders. Profits and losses are passed through. There is no personal liability unless there's fraud within the corporation. Ownership is transferred pretty easily because you have stocks and you have percentages in ownership that you sell and is yours to sell. So more restrictions from the government just means that they are going to say what you can and can't do. They are going to say how you're taxed. They're going to want minutes. They're going to want meetings. They're going to want all kind of things because it's a corporation and corporations are held to a way higher standard than you would be if you just had a LLC. You need to talk to a tax professional to see if an S corporation is for you. C corps, they are the most difficult to form. C corporations, they come with tons of paperwork just to form it, and it's not impossible, but they actually have corporate lawyers that help. It's a lot more expensive to get this paperwork done, but there are a lot of benefits to C corporations. Some of the benefits include being taxed at its own entity. That means the corporation is taxed on whatever the corporation makes. The owners are not taxed. Also, is the separation in liability. Shareholders are not responsible for the debts of a C corporation, nor are they responsible for the debts of an S corporation. But within a C corporation and an S corporation, you are literally a different person within this company. The company has its own tax ID, its own whole identity. If this company dissolved tomorrow, you can move on with your life. You take whatever losses that you put in and you move on. This is a great protection for your assets. And the ownership is transferred easily because it's just stocks, it's just percentages of ownership. Let's talk about accountants. Now, accountants cost a couple dollars. You have accountants that may charge you on an hourly basis, or they may charge you a percentage. So, account percentages are anywhere from 5 to 10. You may get somebody try to charge you 15%. You should tell them to kick rocks, but anywhere between five is really the universal number. But if they, if you get a good one, it go up to 10. So as long as they're saving you money, stop thinking about accountants as a like they're hindering you or they're just something that you're paying for and you're not getting anything back because you could just pay somebody to do your taxes. I am going to tell you the difference. An accountant does income tax planning. They don't just pay your income taxes. So what income tax planning does, let's say you made $60,000 this year and you end up having to pay, you know, $40,000, pay taxes on $40,000 because you just have someone doing your taxes. When you have an accountant understands how to set up for this tax planning. So that 40 that you just paid on may have only been 25 with the proper tax planning. So even though you're thinking about the 5 and the 10% that you have to pay the accountant should be saving you money. An accountant should also help you with your payroll and your bookkeeping. They should also help you with financial forecasting. If you don't understand what financial forecasting is you making predictions on how much money you make, what you need to spend on it to make it, and how much you should be bringing home. And this can be done over a year, 3 years, 5 years. The longer you go out, the more unreliable these type of forecasts are. But you should at least do them for 6 months, a year, 2 years, 3 years, so you can have some type of understanding of where you're going financially within your company. Accountants can also help you with audits. I was recently audited by the IRS, and basically I copped out. So I've never been audited before. I've had a business since 2013. I have filed taxes every year, and I've never been audited before. But in 2019, I was audited, and the IRS refused to give me any type of additional assistance, including stimulus checks, PPP loans, anything else, until I settled that audit. And I settled that audit last summer. It was too late for PPP money. It was too late for a lot of other things, but at least I got the tax people off my butt, and it opened up my flood of stimulus money, tax money for 19, 20, 21, whatever. Like it was literally the I was audited and I couldn't do nothing about it. I had to change my tax person. It was nothing personal. It was my tax guy was somebody that I knew personally, but it was nothing personal why I had to change it. But it was some BS going on, and I had to get my business straight. So accounts can also help with business efficiency, and they can help you manage your cash flow. If you do not have an accountant, I will um, have information for you. I don't think they would want me to just put it on, just post it live on this post, but you can always shoot me a DM, and I have a lot of resources. A lot of things I don't want to put public because everybody don't want their business out there, but we have some great resources, and the people that I deal with are pretty reliable. If they not, I kind of kick them out my circle. So a good referral for me is worth its weight in gold. So here's a few notes from the today's info stream. Do not run your business without protecting yourself, and that's with liability, and that's with insurance, and that's also with making sure you have everything in writing as far as your agreements with your business partners. The type of entity you form has to work for you. Once again, every form of entity is not for every business. You have to understand what you're doing. If you are a dentist or a doctor and you are, putting together an office building with other dentists or other doctors, a partnership may be good for you guys. But it's not good if you are putting together a a gas company. You're definitely going to need a corporation. So you have to understand what you're doing, and you have to understand which entity works best in your profession, in your field, in your business endeavor. Ignorance is not bliss in business, and that just means you not knowing something does not make it not valuable information. You just don't know it. So you can keep ignoring some of these things because you can't afford something now, or you may feel like, accountant is not at the top of your list. Accountant should be the second to the third person that you put on your team because they deal with the money. And that's why I said accountants are worth their weight in gold. Accountants deal with the money. If you do not understand financial statements or anything like that, then you should hire an accountant to help you. You know what? That's what we're going to do next week. I am actually going to do financial statements. I will break down the top three financial statements and what things mean on those financial sheets. So you guys just going through this just actually gave me a good idea. So that's what we'll do next week. We'll go through the three major financial statements, and I will break down what some of the things on those financial statements mean and how they relate to each other. But liability only matters when it matters. So basically, you don't understand what liability is until you need to understand it. When you are facing some kind of lawsuit or you are facing something that relies on you to explain your liability within the company, that's when it matters. So you need to form an entity that holds you as least liable as possible. That is always my advice. If you have partners, everyone should be on paper. There are people who say, "Oh, I'm a silent partner." No, you may be a silent partner when it comes to me promoting or me talking about the business, But if you are in business, you should be on paper. Everybody should have their name on paper and be held to whatever accountability is, uh, you know, is set forth in that paper, whether that be financial accountability or whether that be some liability within the company. All income and outcome agreements should be in print. So you should not go into a partnership with anybody without having it in paper. I know people say, "Oh, I'm a real one. You don't got to worry about me." And we a handshake will do it. I have entered a few deals and I could not be more happier with the outcome. But I have also entered deals where the paperwork had to be right or I wasn't signing on for that. So if you are a real business person, you need to understand that the paperwork is everything. If you can't prove it, then you are setting yourself up for failure. It's no better way to prove it than paperwork or text or any other form of quote unquote receipts. If anybody have any questions, it don't look like that many people is on right now. We had a few on and off, but if there are any questions, you can always leave them uh, on this stream of on this text, whatever, on this post. Leave the messages. I will respond as quickly as possible. I do not want to belabor these points. I am doing these info streams every week. And what I'm trying to do is just get my people in the habit of understanding that something is coming out every week. And if you are not a member of this group, then you will not be seeing it. That is set up that way on purpose. You cannot share this. Thank you for listening. Once again, we are here every Sunday at 7 p.m. I will start right around 7 p.m. I'll get everything loaded up at least 5 minutes before to make sure there's no glitches and everything is working properly. But at 7, I will start these presentations every week. I will put together a business Zoom meeting for business credit and some business basics. If you are interested in that link, I will be posting the time tomorrow. It'll be later in the week. So, thanks again for tuning in. Y'all enjoy the rest of y'all weekend. And that's